What's going on, ladies and gentlemen? Welcome back to the channel for another weekly update. Hope everybody's having a lovely weekend. And with that being said, let's get into the video. All right, so we got a lot to talk about today, guys. Today is going to be pretty exciting. We got some exciting stuff. So we're going to go over the TA, and then we're going to be going over Jerome Powell. Okay, that has to do with FOMC. And then we're going to be going over why I don't think we're going to have any Volcker moment coming around the corner. It's not something that really matters. If you're trading right now, it doesn't really matter. But it's something to have in the back of your mind so you know not to sit there panicking like many could be doing in the future. I don't know. All right. But with that being said, let's get into the video. We're going to start with the weekly chart, then the daily chart, then the 4 hour, the 1 hour, and then we're going to get into the other stuff mentioned. And then after that, we can look at some individual tickers. And yeah. All right. So as you see, we do have this big fat green candle. Now, the first thing I will say is SPX, not even SPX, SPY and QQQ, they ended up rallying this week. A big fat green candle off of inclining volume. All right. On the daily time frame, we do have a mix between the volume supporting and the volume not supporting. You have declining volume here on SPY. You have inclining volume here on QQ. So I'm going to be talking about what I think this is going to be leading to this week. All right. Further down the line in the video. But yeah, you did have that inclining volume, but keep in mind you do have your oscillators over in extremely overbought territory, or not extremely overbought territory. I guess I would consider that being up here. But you have your oscillators up at extremes every single time that has happened throughout this bear market. Okay, you've only had 2 times. All right, and you have fell flat in your face and had a very big decline following that after. I guess we could honestly call that all one and the same there. Then you had this leg down there. All right, so you had you had a $84 move down on QQQ there, and you had a $78 move, so another $80 move down there. All right, so I do think that is what is going to be following us over the next 1 to 2 months. I don't know exactly how things are going to be playing out, but that is why we provide you guys with daily updates here on the channel. So as things change, we can have our thesis changing. All right. But all in all, I don't think our thesis is going to have to change. I'm going to make it extremely obvious here in this video. I know I'm not going to be stepping back. I retweeted something yesterday. It was after market close about it was someone just saying, hey, shorts, if you're going to sell right now, you should never short again, or it was something like that. And I completely agree, like straight up. If you are really being convinced to sell right now, as like you're like right, like this is the catalyst. This is the catalyst that, like, obviously no guarantees in the market, but this is the catalyst that in my mind, this is it. Like this is there's not a chance, and I'm gonna be going over why there's not a chance that Jerome's gonna come out dovish. All right, there's literally no chance. It's not going to happen. He's literally, if you just listen to what he has said in the past, then yeah, you know, like there's not a chance he's going to come out dovish. It's just not. So I'm going to be outlining that and my reasons for that in this video. But yeah, all right. So I don't remember where we just left off there, but I assume it was on the weekly charts here. Something I actually did notice on, what was it, QQQ, and I believe we have the same thing on SPX over here. On the RSI, you do have this. Now, I did know about this, but I'm going to, we're going to have this up here. I'm going to keep it up here in SPX so we don't have it cluttering our RSI and, yeah, our RSI and SPY and QQ. But I think you're going to be, I don't know if you're going to hold this, all right? But we have seen on the VIX recently that this trend line has really came into play. All right, you had one bounce there, and I believe you're about to have your second bounce. I think you're going to start the decline on Monday. But to me, it would make sense that they hold you up here for the catalyst to then shove you all the way back down. All right, and that's personally what makes sense to me. It doesn't have to happen. They don't have to consolidate you up here for 2 days before FOMC on Wednesday, but it would make sense to me. All right, so there's really 2 scenarios that I do. Well, there's 3 scenarios I do see playing out. Going into FOMC, we will cover that after we finish going over the different time frames. All right. But yeah, on the weekly time frame, that is something that I will be watching. It doesn't really matter right now. It is just something I noticed. We can actually take these off. That is what we will be talking about, why those lines were on there at later on in the video. Because guys, it's some exciting stuff. Like, yeah, I don't know why I have not decided to just show you guys this sooner, all right, or even show myself this sooner, all right. It I mean, I'm not gonna say I haven't done a decent job at silencing the noise. Like, no, I've made it very obvious. I don't really care about what other people are saying. I really don't want to be watching other people. I don't want to listen to others, because all that has gotten me in the past is really to scared to, get myself scared out of my position right around the reversal point. Or yeah, it just doesn't lead to good things. Okay, yeah, I'd rather just have my own analysis. It has been the only analysis that I have found that if I just silenced all the noise, I could have just listened to myself this whole time, and I could have gotten the exact perfect entry, all right, which did come on Friday, all right. And if you are on my Twitter, then you do know exactly what that was, and that was the bullish divergence over on Mr. VIX. All right, before we talk about that bullish divergence on Mr. VIX, we will talk about the weekly time frame right here. All right, so you do have a bearish engulfing candlestick right here on Mr. VIX that did engulf the bottom marker that we had last week, which is just this this bullish Ramy candlestick formation right here. You had one right here, you had one right here, you had one right here, you had one right there. If you go down, I'm sure you're probably going to find a bunch of them. They're just stuff that mark reversals on Mr. VIX. Taking all of that clutter out the way. You did get engulfed by a bearish engulfing candlestick, but what did happen is you did not close the week underneath this level, underneath the 1834. Did you? No, you did not. All right. So you did not nullify this pattern. It is still in play. You did end up canceling this one out, and we did end up coming back down. But something I will actually show you guys real quick. I already have looked at this before in probably last week's video. But let's just revisit this real quick so we can get that out of the way. Looking at the trend line. Where did my trend line go? It's just gone. Okay. Bring that back up. Come over here. Come over here. There we go. We'll leave it right there. All right. You come over here. We will come over to the weekly time frame right there. Weekly time frame right here. We just need to see the bear market, the time that was spent in this bear market. All right. Now we have 1. We have 2. We have a 3. All right. Where were the trend line touches? All right. What do we have now? I'm here, but look at what's going on over here. All right. So you got this one right here. You have this right here. You have this right here. And now, where do we have right here? We did have it right here, but guess what? You had this pop up right here. It got nullified. We formed that when we were down here in consolidation, when you started seeing the buyers step in there. All right. Well, now we have this one. All right. And guess where you are right here. I understand you broke your trend line, but it's still, the pattern still is here. Okay. It is when you are right here at this trend line. It formed during your bear market. There you go. All right. That is why it is the bottom marker. All right. Honestly, even though the trend line is broken, it's still going to be something that I do have in my checklist. All right, my new top checklist. It did complete today. I will not be sharing that with you guys. I am sorry. All right, but just know that if you do follow along with the channel, you have me using it, and it will be reflected in my analysis and my trades. So there will be that. All right. I'm sorry, guys. I just can't give you guys everything. I'll give you guys most of the stuff, but some of the stuff has to be mine. All right. And yeah. All right. So moving on, let's go over the VIX. What popped up on Friday that got me all hot and bothered was the bullish divergence on the daily time frame. All right, guys. So this is something that's been at 5 out of 6 bottoms that have came during this bear market on the VIX. All right, so for anybody new, I understand the people who have been here, you guys know exactly what I am going to do here. All right, but for those of you who have not been there, all right, you have that bad boy right there. Let's just go a little like that. You have that right there. Come over here. Oh, what happened? You made your lower low right there. Oh, you made your higher right there. Look at that. Oh, it was that one right there. It wasn't that. All right, you come down here. What do you have right there? You have a bullish divergence that formed right here. What do you have right here? You have a bullish divergence that formed right here. what do you have all the way over here? You have a bullish divergence that formed right here. All right. The only time you did not form it when you had a just about 100% run, or above 100%. I think going from 19. No, never mind. You did not have. We have not had a VIX 100% run this whole bear market yet. So, except for literally when it started. Which, by the way, guys, we are literally right back where we were at the start of the bear market. So before the selling took place, this is pretty much exactly where we were on the VIX. And guess what, guys? Has this year not shown people that there is clearly risk? Okay, I'm just saying, has this not shown everyone that there's clearly risk in the air? The market is currently pricing in less risk than you have being priced in when you're over here on SPX up here. Okay, this makes no sense to me. All right, but you know what? The market is just genius and always prices things exactly how they should be priced, because that's why the VIX was down here, even though it then shot up here. It only shot up there because people had to chase it. Whatever. All right. What I'm getting at is the market is completely blindsided right now, and so many people are about to be pants. They're about to have their pants ripped down when they're up on stage, and it's going to be ugly. All right. Yeah, that's literally it. All right. But either way, guys, this is something that I called out when we were bouncing here. I called this out and I said, wait a minute, we don't have our bullish divergence on the VIX. Now, if you also were with me, you would know that when we had this day right here, I was saying it was likely that the next day, I don't remember what catalyst was this day, but I said if that catalyst was going to be the catalyst that marked the downturn on SPY, like the downturn, the put in the top, then I said we were going to need to see this come down and break this low. We never got that, and I kind of just brushed it off. I literally just brushed it off after that. I was like, you know what? No, it makes sense, all right? I don't think we're going to go back up. Well, guess what, guys? We did go back up. We did take out highs. It happened twice. We took out those highs, all right? But your boy was skeptical about this high over here. I believe that's what that correlates with. That is Friday the 13th over there. Come over here to VIX. All right, over here. Yeah, this was Friday the 13th. So yeah, your boy was skeptical back then, and then your boy completely forgot and listened to the noise. And yeah, I mean, again, this is just another example of my own and might I add, very wacky analysis, all right? You're not going to find any analysis on the internet that is as wacky as this. So I completely understand. Clown on me all you want, all right? I'm a clown, all right? But in reality, I have found something that works, all right? These are like literally all my analysis is just I've taken every single thing, every single pattern that I have found that has worked over the last, like, we'll say 1 to 2 years, and that is what I am using, all right? Nothing else is in here. That is it. It is taken from all different places, all right? And this is the culmination of all of those, if that is the right word for that. But yeah, guys, all right, you do have that bottoming tail right there that also happened to come right there. I don't know if it is going to be producing a bottom. Maybe we do end up going back out, but going back down. But I will say you do now have the bullish divergence in place that has been there 5 out of 6 bottoms. That means we had an 83% chance of putting it in here. Well, guess what, guys? Against all odds, it got put in, and your boy did not listen again to something he called out. All right, so I mean, yeah, guys, this is 100% in that top checklist, because yeah, now it's 6 out of 7 bottoms on the VIX has came with this throughout this bear market. So yeah, the bear market top checklist has to have this. All right, it does. All right. All right, but yeah, you got that. And the reason I don't think, I think you're probably going to be moving down on Monday is because you were right here at this trend line, all right? And you did get that bounce last time, even though we didn't know if you were going to get that bounce, but you literally did get that bounce, all right? So I do think it's likely that you do get this bounce here, which means you do go down on SPY on Monday, and then what happens after that, I don't know. Okay, I don't know if you just continue falling into FOMC, but just realize this: if you have one heck of a sell-off going into FOMC from the levels we are right now, say SPY got down to, we'll say SPY plummets all the way back down over here at 395, even I'm just saying, if you do have one hell of a sell-off and you get these momentum oscillators somewhere back here, it opens up the door for FOMC making this bad boy rally. I don't think it's going to happen because of what I'm going to be talking about in this video, what I'm going to show you. I'm going to show you someone else's due diligence that's pretty much going to, like everything that I've been saying for like this whole time, pretty much all over here, okay, for the past, like, we'll say 2 months, all right? Everything that I've been saying and I've been paraphrasing, well, this guy went and he put in the DD and he got exact quotes. So we're going to put my paraphrasing into quotes, okay? And I'm going to show you guys this guy's work because, again, it's another factor that makes this extremely obvious of what is about to happen. It's everything that I've been saying. Like, I watched Jerome. Now, I will be taking notes from now on, guys. I'm going to have a market binder in which I take notes on different events, different dates. All right. So I know, like, moving forward, like, I know, like, hey, what happened? What was the market's reaction to that? What did the guys say? All right. In that way, I will actually have things to reference instead of just always paraphrasing things that I do end up watching, because I do watch every market event. I don't take the notes. I don't know exact quotes or anything like that. But either way, we're going to be looking at that, showing why it's likely that you do not fall into it, because if you have one hell of a fall into it, like if you fall Monday, Tuesday, and you fall Wednesday going into it, it's like, yeah, you're going to have your 4 hour, you're going to probably form a bullish divergence on your 1 hour, maybe you're going to get this back down here, all right, and then that would open up the door for one hell of a rip, all right, but I will say then, all right, because, like, obviously we still need that move down, all right? So this is why I think, like, this is another reason I don't think that's likely. It's not likely, all right? Which is because, like, look at where your weekly oscillators are. The last 2 times you were up here, like, you had, like, we went over this, the first thing we went over, right? QQ, $80 sell-off. All right, I think that is still completely on the table. I think this is literally just the biggest bull trap we've seen this whole bear market. But just look at this, all right? You had these rips. You had this mega rip right here, okay? You had this mega rip right here. You had this right here. Well, where did it take place from, guys? They took place from oversold territory, all right? Oversold territory. Where are we right now? You really think something massive is about to take place right here? No, it is not, okay? No, it is not. Now, I will say you did have a rip right here, and guess what, guys? You're now in extremes. So if history is going to be repeating itself, well, we are about to see a cool off. Okay, you see the stochastic right here. We're over here right there. All right, RSI. This, like, literally is the range where you have sold off every single time this bear market. All right, I'm not saying it is going to be repeating itself, but yeah, there are other factors that we're going to be discussing in this video. One specifically that's going to very clearly show everyone, like, hey, dude, no, you're like 100% at a bottom on the VIX and you're at a top on SPX. And anybody who thinks otherwise, holy crap, you just need to open your eyes. And I am the guy who's going to show you what to look at. Okay, if you don't know what to open your eyes at, I got you. Okay, I'm that guy. I am that guy. All right, I'm not those other guys, but I'm this guy. I'm Henry. All right, so yeah, let's get back into it. All right, so let's finish going over the daily time frame, then we'll go over the 4 hour, 1 hour, and then we could just finish off with the Jerome thing I was talking about. And then well, actually, also I got to show you something on the VIX, and then what I believe is, like, reason to believe we will not be getting a Jerome Paul, like, we won't get a Volcker. Okay, we won't have any Volcker event take place where he, you know, brings rates up to 10-20%. It's just not physically possible after seeing this. All right, it's just literally not. If you just do some mental math there, it's just not possible. All right. So we're going to be talking about that in a little, but let's finish up with this. All right. So you still do have this. I believe you have the triple bearish divergence still taking place right here. 154 on your CCI there. 159 here. Yes, you still do have the bearish divergence take place here. All right, and you do have the same exact thing over here on SPY, except you just have a single divergence right there. Come over to QQQ, and then look at your RSI all the way up at 70. All right, this guys, it's exactly why I think you were about to have, like, the biggest sell-off you've had the whole bear market. All right, because you haven't been up here. Well, maybe not the biggest sell-off you've had the whole bear market. All right, maybe this one was bigger than the one we're about to take. That's about to take place. Like, this one was down to. This was an $80 sell-off, all right? Well, guess what? $80 brings us lower than this bear flag target here on QQQ. All right, which you already broke down from. All right, so the target is on the board. You just kind of came back and had a, I think it's called the throwback. But yeah, guys, like at least I think you're probably going to end up getting back down into that target. I made that target because that is right there at the support. So we just, made it there, made it the nearest round number there. But yeah, you get the same thing over on SPX. You do have this target of, is that for this? Yeah, so it is for this bear flag. You have this target right here. All right, QQQ is in a much larger bear flag than the one on SPX, which is also on SPY. I just didn't put it on SPY. But the target for this is 3740, so that would mean the target for SPY would probably be around that 375 area, which is right here. Or actually, no. It'd probably be a little under it, so that's 377. So yeah, it would actually probably be closer to 370. The target on SPY would be like 370, 371, 372, something around there. Regardless, it's irrelevant right now. It does not matter. It does not matter. On the daily time frame, you do have your CCI hinged down. Stochastic is going down. But you do have your RSI coming in contact with this trend line. I do think you're going to get that bounce there. And regardless, yeah, I'm still excited to show you guys one thing in particular that's just going to shut the heck up out of any of the bulls. And I understand I don't have a lot of bulls just in there commenting or anything like that, but like I know for a fact there's a lot of them watching it and like, hey guys, I'm serious. I'm just trying to like straight up. All right, if you don't know what to open your eyes to, I will show you what to just open your eyes to. All right, because it is extremely obvious what's going on. Extremely obvious. All right, but yeah, SPX does have its stochastic crossing down. It should be the same on SPY and QQQ. You do. All right, SPY isn't quite at that 70 level yet, but it is at 63, whereas QQQ is at like 68 something. Yeah, 68.55. It's rough. All right, and yeah, the last time you were up here was at this August peak. All right, you did form the bearish divergence though over there, but because I know Jerome is not going to be dovish, I know we are not going to be forming that peak. All right. Also, we're gonna again look at the VIX, and you guys are again gonna know, like, holy crap! It's very obvious that no, we're not gonna be going any higher. All right, this is it. All right. But yeah, you reached this 70 level over here, and this is where you had one hell of a sell-off start. Okay, and I'm not saying it has to lead to, like, we could have a rebound before like a massive, like, it could do that. All right, but the fact that the RSI is up there, okay, shows to me we have a larger scale sell-off. Okay, so instead of something like that, okay, where your RSI was up here, we have something like that is about to take place. We have something, see how your RSI was right up here? We have something like that is about to take place. It's not going to be one of these little ones. It's not going to be like, I mean, you did, like, this is one hell of a sell-off that you had literally from over here. All right, so it could happen. All right, it could. Well, I mean, no, I mean, that doesn't show you anything. This was still that massive, still an $80 sell-off right there, just like you had here, just like you had there. So yeah, I mean, yeah, but like all I'm getting at is you have a one hell of a sell-off in store, okay? Even if you do go a little higher to form that divergence, it is right around the corner. But I'm also going to show you why, like, no, you're not going to have that little divergence there that forms. You're going to be falling off a cliff. Very likely on FOMC. All right. All right. So after we covered that, let's go down to the 4-hour time frame. Before we do that, I'll actually show you Apple is right under its 200 MA. So that's also something that should be noted. All right. So if we do go a little higher, I do think it's just going. I think it's just going to be on QQ if we do end up breaking that. I think SPX and SPY is going to end up holding this level. You do have QQQ having a 4-hour bearish divergence as it goes into this level, and then you have a topping tail that came on that level. So I know it's not showing it here, but this was the open over here for where you then sold off all day. So yeah, that is why this line is here. If not, it would be up here at 300. But I don't think you are going to be pushing up there. But if you do, that is going to be why Apple ends up coming up to this 200 MA. Guys, we do have Apple earnings, and it is rallying its absolute butt off going into earnings. We do have we have Amazon, Google, and Apple on Thursday. So that is the day after the Fed meeting. So yeah, that could be more fuel to this whole, what I think is going to be the recession narrative that comes along. It's going to be the recession. It's got to be some bad narrative. And the only one I could really think of is hey, it's not the inflation's taking over narrative anymore, and now it's going through recession. All right, it's going to be, we need to go through tough times in order for things to get better. I think that's the narrative that's going to come along. And I know rough times, guys. Rough times we're in rough times. We got rough times ahead. Like, we're not having any soft landing. I've made my case in many other videos. Go listen to other ones if you want. All right. If you want to hear my case and you're new here, let me know in the comment section. I'll leave it in the next one. All right. But I've gone over that quite a bit. But yeah, that's just something, a little thing on Apple I noticed was you also had inclining volume, the same on QQ, which that's why leads me to believe like maybe do go a little higher on QQ versus SPY. Maybe SPY does end up holding that. All right. Maybe this was the high on SPY. You do have the shooting star candlestick. But yeah, all right, QQ can go a little higher. Maybe it does. All right. You have had, if you do this from here, it's a 9% rally right there on QQ, whereas SPY, I think it was only like a 5% rally right there. So QQ has been leading the charge to the max. QQ is right back at the December high, whereas SPY did not hit that. But crap, what was I gonna say? There was something I wanted to point out. You come over here on SPY. All right, so this is something that shows us like, hey guys, this was meant to happen. Okay, I'm gonna point it. Just look at the volume down here. First of all, like, yes, you're declining there, right? But look at on this candlestick right here, this volume stick right here. You have this incline in volume. You have your big red day. That's like, that was actual price action. All right, now you had declining volume here. You fell. You had declining volume here. That's what told us like, hey, maybe they're gonna send you up the next day because buyers or sellers weren't supporting that move. You had declining volume compared to the next day. All right, so if you have the sellers supporting the move, you should have seen inclining selling volume because they should be getting stronger as they go, not weaker. If they're getting weaker, it shows you the move is fizzling out. So that's all that was showing us here. Plus the doji candlestick, that indecision / reversal candlestick. All right, then you have the inclining volume on this day. All right, notice it right here. That led me to believe we're going to have the follow through on the next day. You have it right here, all right? But like, yes, you have the volume telling your story right here, and that's why this declining volume does mean something and has led to things obviously over history, but definitely in the recent past. What I'm trying to show you guys is that this was the real move here, and this is a complete fake move. Okay, you literally see from here on you had declining volume. Here on is this move right here. All right, these 2 days right here, that was what marked this fake move. You could have had that sell off from the trend line, which looked like that's what people were trying to do. But I do personally think they were, now I don't have any software that shows me this, all right? I don't, I think there's like something called Bookmap. I can look at that. I don't know how much a subscription would be, but I would imagine it would probably be like $100. So I could get that to look at this, but I remember Zip Trader the other day mentioned the 3860 level, and that is where algos apparently are set to sell. All right, if that is the case, that makes complete sense. Okay, you drop down here. This is where I started entering puts. It was right here on this wick. All right, you drop down. They held you. Okay, you didn't drop under there. I don't know when that level got put on. Maybe it was put on over here, and that's why you end up coming down. You just missed it there and rallied back up. But notice how you came down again. You just missed it again over here. I think that was again probably done to hold out that level. Again, I don't have any software to look at that, but if it's still there after Zip Trader called it out, like that's where things are going to heat up. All right, so that's why I do have it on my thing. It could mean nothing, all right? Or you could get down here and boom, you get down here to this target extremely quick within a day, all right? I have no idea how it's going to go. But look at this. Notice how I just said on SPY that we know that this is a fake move, all right? Well, guess what? All right, this day right here was over here on SPX. This was where you avoided, like if you kept the selling, you would have hit this level and you would have started this massive sell-off if that level is actually there. Again, I don't have any software that like shows me it, so I don't know. All right, this is just going off of something that he mentioned, so I've had it on my chart. All right, but yeah, it could accelerate there, and that could be why they started this fake move, this bull trap. But guys, it makes perfect sense. You're rallying going into FOMC. FOMC is guaranteed going to be a catalyst that brings you one way or the other. All right, the pressers that he holds at 2 p.m., it's either 2 or 2:30 each time. All right, those press conferences, those are the ones that usually move the crap out of the market from his comments. All right, so guaranteed we're getting a market mover out of this. We're getting a market direction, I should say, not market mover. Getting a clear market direction coming out of this. And we have been rallying straight into it. And now we have weekly oscillators at extremes. All right. We also know Jerome has literally came out telling us that, hey, we're holding rates, or we're having rates at 5.1% by the end of 2023, and we are not lowering rates. I think he said all of 2023, but he might have actually said he's not they're not lowering rates till the end of 2024. I'm not sure on that one. I think we'll play it safe and say he said that for 2023. But either way, he has literally told the market up here that no rate cuts are coming, and the rates are going to be above 5% and at 5.1%. All right. And then you had somewhere over here, I think that's what caused this wick down right there to form this hangman candlestick right there. That is what was caused by Bullard. All right. And he came out saying that they're going to have what he sees is by the end of 2023 it being 5.25 to 5.5%. That's way worse. All right. So not good is what I'm getting at, guys. If you just listen to the Fed, they will literally tell you what they're going to be doing. And that's that. You don't have to sit there fighting the Fed. All right. You don't have to sit there. Excuse me. You don't have to sit there stressing about the Fed. Yeah, there always will be a knee-jerk reaction at these types of events. So you're probably going to see an up and a downside move. Whichever that first move is, that's going to be the fake move. So, like, you know, if the actual move is down, you're probably going to see it throw up. You're going to see a % or two go up, and then you're going to see a flush. All right. I'm not sure how it's going to end up playing out, but that is how I have seen it happen in most of the last ones. All right. Most of the ones that I've watched throughout this bear market. All right. Yeah. All right. So we know Jerome is going to be bearish, is what I'm getting at. We know Jerome can't have this market rally taking place. All right. Oh, did we finish going over the 1 hour time frame? I think we did, but I don't know if we did. We did slightly overthrow this trend line. We did, you know, we flipped it right there. We are coming back into it. I'm going to see if this causes a bounce level. I don't think it is going to, though. Because, yeah, I mean, it could, though. It could, and they literally could they could consolidate you in a range up here until Wednesday. All right. They literally can do that. All right. I'm not going to say they're not going to do that, but I do also want to point out you do have this small divergence taking place right there. You also do have a larger scale divergence taking place there. And you also have the same exact thing over here on the RSI as well. All right, sloppy lines there, but they should get the job done. All right. All right. So now let's talk about what I really want to talk about. All right. I'm going to show you guys this, and then we're going to go over why Jerome is like guaranteed to be bearish. Okay. And again, obviously, no guarantees in the market. We've seen that over the last few weeks. We've seen that. All right. But like, you know, if you just, again, open your eyes, I'm showing you the thing that you need to open your eyes to. If you just do that, you like, it's very freaking obvious what's taking place. All right. So we come over here, we're going to show you this, and then we're going to go over what I was talking about, that other guy's work on how he got all of these Jerome quotes together and stuff like that. All right. Coming over here, coming over to Mr. VIX. All right. The reason I have that, I have these lines up right there. All right, so we need to find, what is this? So this was Thursday, October 13. Okay, so October 13, this should be around here. All right, so October 13, eh? Right, come on, don't do it. October 13, right there, mate, right there. All right, and then you come over here, and this was January 4th, so that should be over here. Vertical, Jan 4th, come on, buddy. There we go. There we go. All right. We got to do our best to match this up to that. All right. That's all I want to show you right here. All right. We're going to go like a little like that. All right. And then we're going to try and we're going to do our best here to match you up here. All right. So we're going to go like that. Oh, pretty spot on right there. Pretty spot on. All right. So I think that gets the job done. Let's just get those moving averages out of the way. All right, and I do like Webull because you don't have to pay for indicators, and you kind of just can load any amount of indicators up there. So that is where I have all the moving averages always up that I'm watching on a daily time frame. But on here, I put them up when they are relevant. Right now, the 200 is relevant. All right, that is what I've had up. All right, crap, I moved it. I didn't want to move it. All right, that's pretty spot on right there. So we're pretty spot on. We're going to use... All right, we're going to literally look at tops, okay? We're going to look at tops on SPX, okay? So you got here, look where VIX was, This is what I'm getting at, guys. All right, look at your top right here before you had a decent amount more of selling. Look at where VIX was. Okay, look at your top. Look at where VIX was. All right, look at this. Look at where VIX was. All right. You had this one up here. You had this decent rip. Well, look where VIX was. It was on this one. VIX reached all the way up to 36 bucks. All right. You freaking, you hit up here. Well, what happened to Mr. VIX? It had this deep dive back down, 25 bucks. But that's not really a top. That's not really what I'm trying to show here. All right. Even this wouldn't be considered a top, but it's still VIX is around the 20 level. That is when you continue your sell off. So we got right here. All right. Look at that. All right, VIX took a dive. All right, took a dive. You got this low right here. Well, guess what? VIX was up here at 35. All right. What do we got right here? We have this top. Where was VIX? That was literally when we were down here. Okay. That was literally when VIX was right here. Okay. And you had 2 more days that went down and made that low. All right. You got this top up here. Okay. Where was VIX? Right here. Right here. Was it? No. Right here. Right here, right here. Either way, it was right here. All right, that's where you had your previous top. All right, so I hope it is extremely clear here. All right, what is going on? And now what we're gonna do is now we're gonna put red ones on or green ones on the board. So these are times when S&P has bottomed. Okay, we bottomed. Yay, yay, bottomed. Back here. Where was VIX? Up here. All right, where are we over here? Oh, where was VIX? At 35. All right, where were we over here? Where was VIX? Up here. All right, where were we over here? Where was VIX? Up here. All right, where were we down here? Where was VIX? Spiking up to almost 40. All right, where were we? Right here before you had that last rip before that literally ended, you know, the bull market. All right, you had that one right here. VIX took a dive there. All right, guys, so I do hope it is extremely obvious from the charts that I have right in front of you what is taking place right now. Oh, by the way, guys, all right, by the way, I forgot to circle one last thing. What might it be? Buy at a top, VIX at a bottom. All right, guys. There you have it, guys. There it is. This is literally the, like, technically speaking, this is the only freaking thing you really need to look at, and you know exactly where we are going. You know exactly, like, hey, I can buy 1 to 2 month puts now, and, like, hey, they will pay, because you could have done that here. You could have done that here. You could have done that in either one of these spots. You could have done that here. Okay? And there you go. All right? History doesn't repeat itself, but it is likely to rhyme. Okay? And that is what I believe we're about to have taking place. I do think it is about to rhyme its little butt off. All right, so we're going to delete all of these. Take a screenshot if you want. Send them to your friends. If you got any friends you're like going back and forth with about, oh, the market's bottoming, the market's topping, there you go. Send them that right there, and just it'll shut them up real quick. Shut him, her up real quick. It'll show them like, hey, no, you are part of the crowd that is getting trapped. All right, and that really is just showing us like, hey, guys, we're not part of the crowd. When we're thinking like this, what I'm saying right now, we're not a part of the crowd. The crowd, every other time, has, you know, done, like, this is where they're buying SPY, which has been at the tops. All right? So I'm just saying, there you go. Okay? There is the thing that you just needed to literally open your eyes to. And there you go. Okay? Now we're going to look at another thing that all you have to do, again, is open your eyes to. And there you go. All right, so there's 2 last things we're going to be talking about. We're going to be looking at this guy's DD here. All right, and this is, again, you're gonna pretty much hear like some pretty similar things that I have been saying for months now. Again, I have always said that, hey, I'm paraphrasing, guys, but these are the quotes that I speak of. When I say I sit there watching these FOMC press conferences, all right, I do. I just don't sit there taking notes. Now, after seeing that this guy has put together this, I should be taking notes. All right, I should, because I don't want to paraphrase. I want to be able to look at data exactly like this guy does, okay? Is our words data? I don't know, okay? Regardless, I want a, I don't know. I want to have the journal where I know exactly what took place in 2022, and I can always look back on that. So that is why I will start keeping a binder that literally goes over events and the charts and what happened and dot, dot, dot. But yeah, we're going to quickly, I'm just going to read this to you guys like you guys are little kids. I'm the kindergarten teacher here. And here we go. All right. There will be blood on February 1st. Powell will retighten financial conditions by forcefully addressing rate cuts head on. At the November FOMC, he referred to the broader tightening project as having 3 stages: rapid hikes to get to neutral, measured hikes to get to sufficiently restrictive, and 3, staying at a terminal rate for some time. At the December FOMC, he said that over time, financial conditions must reflect the policy restraint that has been put into place. On many occasions, he said that the policy rate is merely a tool and that the Fed's aim is to create sufficiently restrictive financial conditions. Powell is famously well attuned to market conditions. And guys, this is exactly why I say Powell knows everyone's trying to front run him. Powell knows everyone's trying to call BS. Powell knows exactly what's going on. You really think he's going to play right into their hand? No, he's about to do exactly what this guy is also going to say, which is slap him. He's going to give him a slap back. You can't slap Powell and not have him slap back, all right? All right, so on November 30, 2021, he retired transitory. The market sold off into December 2021 FOMC, and he came out measured in order to soothe the market ahead of what he knew was coming. The market sold off into the May 2022 FOMC on concerns the Fed might go 75 basis points. Powell came out measured and said 75 basis points was unlikely. The May CPI came in piping hot during, and by the way, actually, let's just look. Where was May, guys? Where was May? All right, May was over here. All right, you had this. Was it? No, May was over here. All right, you guys. Yeah, I guess I won't take any more of your time. You guys can look at these dates. Go back if you want. See what how the market responded. But my point is that hey, this guy is making it extremely obvious here that Powell is he knows exactly what's going on. This is everything I've been saying, except I've been paraphrasing the crap out of it. I do not have exact quotes to point to, okay? The week of his November 30 Brookings appearance, it was a hawkish barrage punctured by John Williams, rubber stamping the need to get unemployment rate up to 4.5%. At Brookings, Powell came out measured to soothe the market ahead of December FOMC. Boom. All right, I think that was December FOMC, or it could have been this. It could have, I think it was this, this is what happened off of December FOMC. Or it could have been this. I don't know, okay? Again, this is why I need that binder. This is why I will be creating the binder, okay? Because I want to be able to look back on exact dates, so I'm not just all over the place in my analysis, all right? All right, so leading up to the Waller's appearance on January 20, it was a hawkish barrage, particularly around the balance sheet. Waller/Powell came out measured, and the market was soothed ahead of what is likely to be a very hawkish February 1st statement and presser. All right, and that is exactly in alignment with my viewpoint. There's like no chance this thing is dovish. There's no chance. It makes no sense. Like technically speaking, we just looked at it. Yeah, no. All right, the charts are getting ready for one heck of a sell-off. All right. And like I may have been early to the party of the sell-off, all right? But like in reality, no, I'm just not blind. I'm not going to be cooked alive like these other people that they're cooking alive, all right? And I'm a realist, all right? And that is it, okay? Now, moving forward, I will, I now have a system in place to pretty much prevent what I did to myself, all right? But in the end, I mean, I'm going to be perfectly fine with my, like, I think I'm going to have 100K by the end of this thing. I'm pretty sure, at least by the end of this next move down. And there we go. I'm exactly where I wanted to be. Not like, you know, the potential gain was much larger there. But yeah, like in the end, I'll have developed a systematic approach, put some forms of risk management into place. All right. And, yeah, I mean, yeah, it'll be good. It'll be good. I'm hyped. I'm hyped. Leading up to Jackson Hole, the entire market was questioning Powell's resolve. That this was a Fed of Arthur Burns. Goldman thought Powell would lay the groundwork for stepping down from 75s, and he hammered. The day before SEP dots were due at the December FOMC, inflation came in late, and speculation was rampant that the Fed would submit a terminal rate of 475 to 500 instead of the 500, 525 projected ahead of the CPI. 17 out of 19 went 500 to 525, and that was what he's saying here is the market rallied into that, trying to call BS, and then there you go. They said slap you. All right. Now the entire market is discussing rate cuts. Rate cuts. The Powell Fed is laser focused on not prematurely easing policy to avoid the Burns Fed stop and go era. This is what I've been referencing of how in the 1970s, I believe it was the 1970s, they literally had to keep, like, there were like 4 or 5 different like cycles of rate hikes because they just kept prematurely doing it. They kept prematurely, like, you know, taking their foot off the gas, and then inflation comes back, and they have to do the same exact pain. There's no logic to that, all right? I don't think now that, like you see what I'm doing in history and trying not to, like, I'm trying to reference history, what happened in history. Well, guess what? Powell, there's no way he's not doing this, all right? So he knows what happens, all right? And, like, yeah, all right? The mere discussion of rate cuts is what is this word? Anathema. Anathema. Yo, anybody feel free to leave the definition of anathema. 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 Down the comments. To this broader tightening project, all right? To repeat, Powell is famously well attuned to market conditions. He knows, one, the market is prepped and ready to front-running rate cuts. That is what's taking place right now. That's exactly what's taking place. That's a whole argument, and, like, it's what I've been saying is not going to happen. Two, Cleveland Fed now, what is nowcast? Cleveland Fed nowcast is turning up. I have no idea what that is. Commodities are firming. Housing is firming. Credit is robust. By the way, guys, lumber prices have soared like 40% this month. Or maybe not this month. I think it's like this week or something like that. It's something crazy. Something nuts. I think that is pretty much it. That's pretty much all I want to show you. It's a matter of how Powell hammers on February 1st, not if. Look for him to forcefully shift the conversation towards how long the Fed needs to hold the terminal rate and why. Look for him to expand on the lessons of 1970. So it is 1970. All right, so guys, this is exactly what I'm talking about. All right, and this is what I was saying about slapping Powell, all right? Why the market continues to punch Powell in the face and not expect counterpunch is beyond me. This is the craziest market setup right here, right now. There will be blood on February 1st, all right? Lastly, here's really what it's at play. Many analysts are trying to figure out Powell's plans in terms of economic indicators. I think his primary focus on his legacy, how he thinks he will be recorded in history. And yeah, I don't think he wants to go down as like, hey, there was that guy who needed to Volcker the market, okay? I think he's trying to prevent that from ever becoming the case, all right? But yeah, all right? And yeah, I mean, hey, that's all I want to show you guys in terms of that, all right? Now, this is the last thing. And by the way, current federal funds rate. This goes along with what we're going to be looking at right here, all right? So you got it right there. This one is saying 4.3%. The target rate, just realized Powell already told us the target rate. The last target rate he had was 5.1%, all right? So, I mean, we're not there yet. And if they paid this, all right, then things are about to get bad. But we can never get Volckered, all right? And that's what I was saying. This makes it so we can never get Volckered. We have a situation where we didn't have in the 1970s where they could Volcker the markets. We have mass amounts of debt. We have 31 trillion in debt. U.S. paid 853 billion in interest for 31 trillion in debt in 2022, more than the defense budget in 2023. All right. If the Fed keeps rates at these levels or higher, we will be at a 1.2 trillion to 1.5 trillion in interest paid on the debt. The U.S. government collects about 4.9 trillion in tax. I don't know what he's talking about here, like that time. But just know, guys, all right, the U.S. government collects about 4.9 trillion in taxes right here, all right? This is bigger than the defense budget, okay? All right, so I don't think they're going to double the rates we see right now. So you currently, like, that is reflected off of 853. That is reflected off of what this is. And keep in mind, all right, so I think that is saying, yeah, so that's in all of 2022. The rates weren't up here all of 2022, all right? For, like, most of the time, they're much lower than this, all right? So keep in mind, this is like nothing. Like, if they hold them at these rates right now, they're going to have even more than this, all right? And that was already more than the defense budget of this upcoming year. Well, we're now in 2023 now. But yeah, what I'm getting at is they don't really have a situation where they can ever bring rates to 10% because the U.S. literally become insolvent. Like, literally, that's what would take place. All right. So yeah, I mean, that's what I'm getting at. All right. They can't do that. They cannot Volcker the market. All right. So that's all I want to say. It's just a realization. It has nothing to do with like what's going on right now. It doesn't really matter. All right. But it is something that I think is pretty cool. All right. Like, we now know they can't Volcker the market. So if this is ever the narrative that they will Volcker the market, we know that's BS. All right. They will not be Volckering the market. They can't Volcker the market because again, US becomes insolvent. All right. All right. So I think that is pretty much it. We can look over our channel darlings. All right. We'll look over channel darlings. All right. We can look at Mr. Netflix. Okay, guys. So Netflix flipped its trend line. This is something I mentioned on Friday's video. But Netflix flipped its trend line. I don't know if it is going to end up pushing up, but I would be looking for a short in that zone right there. I am not in Netflix puts. All right. I don't know if it is going to be falling with the market. I do believe it is going to be falling with the market, though. It's probably going to fall harder than the market. I do think there's more gains pulled out of Netflix than in. Well, I mean, I that is what I think. Okay. I don't know what's going to happen. But I'm also 50-50 with that. Like you have seen, Netflix has gone on an absolute tear. Whereas we had a significant market pullback there. All right. Netflix barely pulled back. All right. But either way, if we do just pull back to the bottom of the channel, that would align with this gap fill right there. That is a pretty significant move to the downside. All right. You come over here to the weekly time frame. All right. And you still have your triple bearish divergence taking place right there. You got a quadruple bearish divergence on your stochastic. And you now have your RSI all the way back up. And this is the weekly chart, by the way. You have your weekly RSI all the way back up into overbought territory. All right. The last time you were there, you formed the bearish divergence right at the top. All right, you formed it right there. You have that topping tail right there, and then you end up going on your way. If it's going to be something similar to this, then you're going to wait for that topping tail that formed over there. I think that is a shooting star candlestick. But yeah, I don't think you are going to push up into overbought territory and form that bearish divergence. I think you're probably just going to start turning down with the overall market. All right, that is my thoughts on Netflix. Okay, now Apple does have earnings coming up on Thursday, like I had mentioned. All right, over here on the daily RSI, I already talked about this, but let's talk about it a little. All right, so you got a bearish divergence going into earnings. You do have your 200 MA. I know it's not on right now. You do have your 200 MA literally like $2 above this. All right, it's at 148.29. We're at 145.93. All right, so you really only need to push up like $2 right there, and you hit that. And this is another thing that supports NASDAQ going up to make a new high, whereas SPY would not go up and make a new high. SPY would hold that double top. Or QQ can hold the double top that it is right now. It could do that. You did have that close underneath the level, so we do have a double top in play unless we get a close above it. All right, but I still do think SPY is going to be, I think it's going to be holding, okay? Because if you look at SPY, all right, and if you do end up breaking above this level, your next resistance is all the way up here at the 420 gap fill. All right, which I'm not going to put on the chart yet because I don't think it's going to be necessary. All right, if we do end up breaking above this, if we have a close over this level, guys, unfortunately, I'm gonna have to put the gap fill on the chart. All right, but it would be at 421.22. So if you do have that close above here, I'm just saying, I think the 0 DTE players they would end up squeezing you up to that level up there. All right, and then you have 420 to 430 range to play with. All right, I don't think that is going to be the case because of what we have already gone over in this video. But that's what happened, all right? And keep in mind, guys, if he has any dovish comments, all right, if you do not hear hawkish things like I've been saying all video out of Jerome's mouth, you are going to have one hell of a squeeze all the way up to, yeah, you're going right up to that 420, 430 level probably in one day. All right, it's going to be amazing. All right, like not for me, it wouldn't be amazing, but it would be a sight to behold. I will say that. All right, but again, what is extremely likely and like in my mind, what is certain at this point, yeah, guys, no, we we are starting the rug pull on Wednesday. All right, it can start before then, but it doesn't have to. Okay, you know, all right, we can consolidate up here until FOMC, but yeah, like we just went, everything we went over in this video pretty much supports like, hey, you're going way down, all right, you're going way down on the markets, all right, you're at a top, all right, you're at a top, but you did have that increasing volume here on Apple, so that does lead me to believe like, hey, maybe you do end up breaking this high here. It's the same way on QQQ, all right, but SPY did have the declining volume, so there's another factor supporting that. All right, so coming over to Tesla, and this was actually another one that again had that inclining volume. You are seeing this volume ramp take place. All right, so Tesla's a short I actually called out. I did call out that before the Wednesday FOMC meeting, it can come up into this 180 and tap that. And this is where I do believe sellers will be pushing it down. It will be in the zone. All right, the top of the zone is literally this is where you've been getting reactions. All right, this is where you got your first reactions up here from the all-time high sell-off that took place when you were probably around 1,000 before pre-split. 1,000, maybe 1,200 was up here. Maybe this was like 1,600 or something. Not sure. All right. But either way, that is where that zone comes into place. All right. Or not comes into place. It is in play right now. You do not have any divergent. Okay, you don't have a divergent high, but you do have your RSI all the way at 70. And last time you did have your RSI come up into this overbought territory. You did have a little dance going on over here. When I say dance, I just mean you zigzagged up here. You consolidated up here. You had this, it does look like you had a broadening wedge end up popping up, and then you end up finally breaking the downside of that. So you can end up, like, Tesla can just dance up here. It can do exactly what it did last time. I don't know if it is going to end up doing that. But my guess is it's going to be selling off with the overall market, which means it is going to get a reaction out of this level, and it's probably going to at least come down and test this this uptrend. But I think it's more likely that you do end up breaking that uptrend and you do fall with the overall market. Maybe you end up taking back down out this low, come back to 94, all right? But it doesn't have to happen, all right? If we are going to be seeing one hell of a rip come up, which actually we did not mention that. This is something I should have mentioned. I actually think I mentioned it on Friday in that video. But look at where, like, you have all this room now in your CCI, guys. So now, like, you're not that far off from highs or from lows here. 406 down 350. All right. So, I mean, it really is something where we now have a complete open possibility. It's here. Okay. The possibility is here where we do form this monthly bullish divergence here. And we do end up having that fuel one hell of a rip. And what I'm going to be looking for is the weekly to come back down in here to at least oversold territory, if not to form a bullish divergence on the CCI. Okay, that is just what gave us these last two decent sized moves. Okay, you had that one right there. You had this little one right here. All right, and then you had that decent move right there. All right, so I am going to be looking at that to look for that next decent sized move to the upside, which I do think is going to be rather large because of what we got here on the monthly time frame. All right, I do think it's going to form that divergence. I do think with what we got going on with Bitcoin, that it's likely that these two monsters, the market and Bitcoin, end up ripping faces together. All right. Before Bitcoin ends up ripping faces, I do think it is going to at least come back down and revisit this low. If not, take out this low and come into this zone that I have here. Simple support and resistance. These are the branches. All right. You got this branch, top of this bull market here. You have over the bottom was literally, if you come over the daily time, or maybe it's on the weekly, you could say it. Yeah. So this is where you first found your support over there. Just a level where you're getting reactions. All right. But yeah, that is what I think is going to be taking place right there. All right, so going back over the channel darlings, okay. Coming over to Microsoft, you're rallying off of declining volume. All right, so it is something that is in alignment with SPY, and then you come over here to Goog. Yeah, so Google and Amazon, they have the same thing going on that Apple had going on, where you ended up rallying off of that this very sloppy arrow there. You rallied off of inclining volume. All right, down here. So are we going to see that follow through on some of these ticker names? Some of these names, some of these tickers. I don't know why I combined the two. I honestly, like, maybe. I'm going to say probably. Okay, I'm going to say probably. That's why I say QQQ has that chance of going up and breaking the high, where SPY, like, has that declining volume as it's rallying, which leads me to believe, like, hey, you're probably not going to break it on SPY. All right, but you can. All right, guys, I have no crystal ball. I literally am a man with no crystal ball. So, yeah, I mean, like, TA doesn't get less scary, as you guys have seen. Like, I am capable of being wrong. I'm not, like, the macro picture, I'm not wrong, all right? Like, straight up, I was 1 to 2 weeks early to the party. All right, that is what has happened several times in the past, all right? This is what just took place, all right? Now I have a system to make sure I'm not early to the party, all right? I have, well, at least the top party, I have to put together that bottom system. But it's going to be very similar to the top one anyway, that checklist, not system, checklist, which I guess that does make it kind of systematic. I don't know. All right. But yeah, NVIDIA, Mara, you did have inclining sell volume on Friday. That's something I did miss. Either way, I'm not really, I don't care about Mara. I'm not looking to do anything until it is back down here. But yeah, guys, like Amazon, they're not Amazon, Google, you still do have this gap fill, and you're right back up here at highs. All right. So if anybody wants to rerun this, all right, I know you could have entered when I called it out on this candlestick right here. You could have entered the 95 put for Feb 17. I know I did call it out on the Twitter. There was that, and then or maybe I didn't call it on the Twitter, maybe because I didn't take that. Maybe I called it out just intra video. But that's actually something I'm gonna call that out on Twitter over the next few days, and maybe I do. I still have a little money to play with, all right. But I was planning on adding another Tesla put with that money, but maybe I end up adding a Google put, okay. Because I do think that is a solid play, and you actually do have this gap fill on Amazon that could be played. So I am going to put that on the chart as well. I'm gonna make you green. All right, let's see what day that was. So it was over here. The high was 90.19. All right, so 90.19. All right, do that. Come over here to WeBail. Okay, you come over here. All right, let's take that off over there. Let's go over to Amazon. What is something that can be played? I just want to look at what are these potential gains, okay? What are we looking at? Okay, come over here. I would be playing the, if I was going to play this, I would be playing that. The gap fill is at 91. All right. Actually, I will say right now, this would be the safe swing trade right here to play that move. All right. So you would be buying the 91 put right here. It's going for $200 by the time it gets to the money. Let's say 2 weeks go by. All right. 2 weeks go by, March 17th. So it'll be March 3rd. All right. Now you're at March 3rd. It's probably going to be like a week goes by though. I'm just saying. But now you're in the money, and now it is, why are these puts more expensive in the money than the other ones? All right, well, either way, it's around $500 in the money, right over there. So you'd be looking at just about 100% gain going with the March 17 contracts. You go with the Feb contracts, though, and I would be, honestly, yeah, it would actually probably still be around the same. I would be going with the 95 strike if I was going with the Feb 17s. But you could go with the 91, and then you could be playing for that bigger gain there. To then let's also say 2 weeks goes by here. All right, and now it's March 3rd. You got a week left on your contract. What's an in the money contract going for? Now it's going for $400. So that would be like 150 to 200% gain on the Feb 17 contracts. Regardless, all right, that is a play that or that is something that can be played. And I don't think I am. I would probably just be playing Goog if I'm going to be playing one of these. But yeah, all right, it is there. So feel free, all right? Feel free to play with, yeah, okay? Play with your own money at your own risk, all right? There's that. You are making that divergent high here on NVIDIA, okay? You do have that down tick right there on your CCI. You are having your RSI tick into overbought territory. The last time that happened was August. No, not August. This was over. Oh, never mind. This was right before the bear market started. All right. So since the bear market started, you actually have not been in here. Guys, check out the weekly update if you guys do want over on Webull and Facebook. It is up. Sorry, guys. I've been forgetting to post on Facebook some of these nights just because I write these on Webull. So it's literally just me copying and pasting over to Facebook right after I post it on Webull. So if you definitely don't want to miss my written updates, they are going to be on Webull guaranteed every night, all right? Whereas over on Facebook, sometimes I might forget, all right? But yeah, you have not been up here since the bear market began. Let's see where you are on the weekly time frame, all right? You're pushing up into extremes here. Clearly in extremes. So this is actually, I touched on this literally in the last weekly update. And your CCI was still over the... like he was in overbought territory on the weekly CCI here. And you're right here at this neckline. You end up breaking out. So is this going to be a false breakout? Or are we going to see the chip stocks? Let's see what's going on with AMD. Are we going to see the chip stocks end up having a sustained move to the upside while everything else is moving down? Now let's look at, this is one. All right. So you have, yeah, semiconductors. So this would be moving with NVIDIA and AMD. Let's see. Oh, what is that? Okay, you're in the same exact boat over here. So, no, I mean, I'm going to be honest. Even though you did have that breakout there in NVIDIA, I think it's still extremely unlikely that you are going to be, not falling off a cliff with the rest of the market. I don't think it's going to move inverse of the market. You do have this bearish divergence going on Soxel, all right? There probably is just a normal ETF for the semiconductors. All right, but I don't know what it's called, so this is the one I do know of. All right, but yeah, so Nvidia, guys, false breakout most likely. With all likelihood, maybe you do end up getting a reaction at this level right here when you come back to it. But I don't think it would serve as anything else than that last bounce before you end up coming back down. All right, and again, you have so much room to fall in this bad boy, so I would not be surprised to see you come down into that zone right there. All right, guys. So I think that is pretty much it. I'm going to leave you guys off with that. And the last thing I will touch on is DXY, guys. So DXY, that is something that I have been talking about for weeks now, maybe even months, since I started seeing it get into oversold territory here. It is only a matter of time. You now have a triple bullish divergence going on in the stochastic. If your RSI getting down near the oversold level, it does not stay down here. Okay, you could see the last time the CCI got to oversold level. All right, oversold levels. Yeah, you ended up having one hell of a rip. All right, I don't think it's going to be any different this time. I don't know if you're going to end up pushing back up to highs up here at 115. All right, no idea. All right, but I do think you are at least going to get one rip. Okay, a decent sized rip that is, considering you are there on your weekly time frame. It's not the daily time frame. All right, but over here on the daily time frame, you do also now have another. You've just continuously pushed out these bullish divergences. All right, so it is only a matter of time until this thing ends up popping off. But yeah, all three momentum oscillators just continuously get these bullish divergences. You got one to take a place right here on the CCI. All right, and we do have that FOMC meeting, and I would not be surprised to see the dollar end up spiking as the market is falling off of that Fed meeting. All right, guys, so that is pretty much it. With that being said, everyone know this is not financial advice. All right, and I will catch you guys tomorrow. Or not tomorrow. I'll catch you guys on Monday. Peace.